What's going on, everybody? Welcome back to another episode of Investor Play. So today is going to be part 2 of the most commonly question that I get asked. What would I do if I was starting over again and investing today in 2025 with low money down, low money out of pocket, not a ton of money in savings, you just want to get into real estate, what would you do? That is literally by far, the most common question that I get asked from people on my socials and stuff like that. And honestly, just my friends and even my family. Hey, I want to get in. How do I get started? How do I get off the sidelines? Analysis, paralysis, all that stuff. Well, first of all, you really want to monitor how much risk you have, especially if you don't have a ton of reserves, you don't have the experience yet. And how can you literally limit risk the best way? Well, one is doing research. 2 is getting help from somebody. Well, you're already watching this channel, so that's probably going to be a good start for you. And then 3, just try to negotiate a deal where you don't have a ton of money out of pocket, where even the worst case scenario, maybe you lose $5, $10, $20,000, something like that, where it's not catastrophic, or some people just think, oh, I just want to jump right in and go buy a 20-unit apartment complex. It's like, I don't think you should do that. I really don't, especially in a market like now where we don't know really which way things are heading. And also with it being a buyer's market in most markets, this is the time when you can really negotiate and get creative. So I'm actually, like I said, I'm going to do it with you guys. If you watched episode 1, and if you haven't, please go back and watch it, because there's a lot of stuff that we're not going to cover that we covered in episode 1. I'm actually investing in a new city. So not only am I going to tell you what I would do, I'm actually going to show you, and you guys are going to be able to follow along as I go. Houston's the market. So I was stuck between San Antonio and Houston. That's why I couldn't decide on episode 1. I really couldn't figure out, one, where I wanted to live on the side and where I wanted to invest. So it was either between San Antonio, Texas or Houston. I decided on Houston. So the last couple weeks I've been just, again, doing my market research, see where I want to invest. And at the same time, since I don't have a place to live there, I'm like, well, I'm going to show you guys what I think my recommendation, what you're doing if you're trying to get involved in real estate, is house hacking. I know not everybody can do it. I got kids, you got whatever your excuse is to why you can't get in. But if you really want to get involved in real estate have a very minimal amount of risk and money on the line, this is by far the best strategy to do it. And plus it's the same thing that you're going to learn, all the tricks and traits and things you're going to learn as a rental property, but at the same time, you're going to be able to do it, 1, with low out of pocket, because you're going to be able to use a primary residence loan. 2, it's going to be you're already out that expense, because wherever you're living now, you're probably paying a mortgage, whether you're renting or maybe you're going to move out and rent your house out. Well, you were already paying that, say, $2,000 for mortgage. So this next property you should try to find that has that same mortgage. So that way, worst case scenario, you have no tenants there. You're still just paying to live there. So it's like, okay, well, that's already an expense. And I'm going to show you some of the things that I did, because you might think, well, I only have 10, 15 grand in savings. I don't have a ton of money for down payments. Well, I'm going to show you how to get, again, it's buyer market. You really can get creative on stuff. And I'm going to literally show you exactly what I did from start to finish, the offer that I submitted, the offer that I wrote, how I tried to make the offer more attractive for the buyer, that they would take it, even though it's not going to be probably the best offer they receive. I'm going to show you all of that. And because I really do think house hacking is extremely powerful. There's so many ways you can do it. The route that I would suggest people do is not exactly the route that I went, because my biggest thing is I needed a garage. I'm sure you've seen I've got a car that I've been finally waiting with. I want a garage. Most duplexes and fourplexes and stuff like that you can get into aren't going to have a garages. And that's what I was really struggling finding in Houston, was a multifamily property, 1 to 4 units, that had a good sized garage. One, I could store my materials, because I source a lot of my materials for my projects here out of Houston. I wanted to have garage space to be able to store them in. And at the same time, I wanted to have the space for my car and tools and stuff like that. So I was able to track down a single family home that has a garage apartment above the garage. So now I get the garage, I get the garage apartments, and I have a place to stay when I go and start to invest there. I have a place to stay. And then the front house, I'll be able to rent out. And once we start getting into the numbers of things, you're going to see that I'm almost going to be able to cover the whole PITI, HOA payment, everything for the whole property just from renting out the front house. So that means that I essentially get to live in Houston when I go there for free. Or if that's your only place you live, say you're paying $1,700 for the apartment you were renting, and then now you go buy this house, and now your expenses are maybe $100 or $200, and that's it. So now you're not cash flowing anything, you might say, but you're saving $1,500 a month that you would have been paying for that apartment, and now your renter up front is paying your mortgage. So these properties are out there. Again, this is not the best like cash flow deal, because to be honest, if I didn't need a garage, I would just go buy a fourplex. There's plenty of them on there. You can get still low down payment. New Freddie and Fannie guidelines is they allow up to 4 units with still low down payment. You can get out of pocket 5% of the purchase price. And if you're just trying to get in real estate, you don't have to go live there for forever. I did that with 2 primary residents that I bought here in Corpus. They had a garage apartment in the back. I rented the front house out. As soon as I moved to the next place, I rented out the garage apartment, and now it cash flows. Same thing with this. Say after a couple of years, I'm like, you know what, I really want to get something bigger. I want my own space. I don't need to live in the back. I'm here full time, whatever the case may be. I can now rent out this garage apartment, and right now it's costing me $197 a month after expenses, with them paying most of the mortgage. Well, once I move out, I can rent that apartment out, say for $800-900. So now I'm positive cash flow on that same asset. So that's why it's really low risk out of pocket, because you could buy this as a primary residence and then 6 months from now move out, put somebody in it, you're cash flowing, you just gained an asset, very low money out of pocket, you got some experience. Guys, the biggest thing is just confidence. I was in that same position a lot of you guys were in. I didn't own any assets. I didn't have a ton of money in the bank. I wasn't some, fancy schmancy hedge fund manager, whatever it is. I just took the leap. And then every leap that you take after that, it gets easier and easier. Today, I literally closed my property. I saw it for 5 minutes last Friday. And today's Tuesday, we closed on it. Wired the money. I was at the gym. Didn't even affect my workout. But that's what happens after you buy so many, that it's like, hey, you already know, hey, I did my research. I know my numbers. And it gives you the confidence to be able to tackle it. This is me literally starting from zero in Houston, guys. I don't have any contractors. I don't know any handymen. I don't know any lenders. I don't know any insurance guys. Well, I know one lender. He's out of Houston. I don't know any insurance people. I've never put a tenant in any property in Houston. So I literally don't know any of it. Don't know the market. Don't know the areas very well. I know them a little bit, but just from my research. So this is I'm not purposely doing this because it's actually like I want to have a place there. But at the same time, this is also to show you guys that anybody can do this. And these deals are out here. And they're probably going to be even better than mine, because I don't have a W-2 anymore. I'm 1099. So the only way I could get a primary residence loan is a bank statement loan that requires a minimum 10%. You guys can probably do it less out of pocket. Now, you might not be licensed like I am. There's a couple things that I did that you're not going to be able to get the commission like I am. But you'll see that these deals are out there. You can get, especially if you're trying to buy like a new construction place, guys, builders are like throwing incentives out there. I guarantee you can go buy a new construction duplex or something like that with almost zero out of pocket with how much money they're giving. They're paying for your closing costs. They're giving you rebates, stuff like that. If you know, hey, my cousin's a realtor, he'll put me on it. Hey, man, I'll give you 1%. You give me back 2%, whatever you want to try to work up with them. You just got to be creative. And especially in this market, that's the stuff you can get away with, because like I said, it really is a buyer's market right now, especially in those big cities in Texas that are really struggling right now. If I think long term, they are going to do very, very well. But right now in the short term, with the high interest rates, super oversupply of building, I think people are really struggling to make sales. But as far as the future, which is why I'm investing in Houston, which is why I picked Houston over San Antonio. San Antonio is going to continue to grow, but I don't think it's going to grow at the scale of Houston. Houston just has so much more infrastructure, and the economy there is just booming. They have everything there. They have tech, they have oil, they have energy, they have everything. So that's why I decided to invest in Houston, because I really see value. And even though the multifamily space is really down there right now, it's the #1 apartment renting place in the country. Houston is. So my goal is to pick up maybe 15 to 50 unit distressed multifamily now that would probably never hit the market when the market was better, and try to pick up something and then do a value, basically a BRRRR with the multifamily space. So that's why I'm specifically buying this property, is because I don't want to, every time I go up there, I don't want to have to pay for an Airbnb and stuff like that. So I'm literally just going to be staying here on the days that, you know, I'm either working here or if I want to come spend the weekend here or whatever. And that's another thing too. I mean, I plan on doing this more than just in Houston because it's one of those things. If I can almost be break even, or say I'm out of pocket $200 a month, why? I just found out that my sister and my brother and my family almost are all going to be moving to Florida. So it's like I might try to find this same type of deal there, so that way, when I have when my family's over there, I can go spend weekends over there. I can do whatever I want. And if it's only costing me a couple $100 a month, but you're still building that equity and getting the depreciation that you get to write off and stuff, in the end, it's probably a wash. So this is a strategy that you can do not just, you know, in the city that you live in. You know, you can do this really anywhere. So let's get in. I'm going to show you. I'm going to share my screen with you. I'm going to show you the property. I already have it under contract, so don't go try to steal it. But I'm going to show you exactly what I looked for when I was looking for this, why I picked it, how I negotiated the deal. I'm going to try to give you guys as much insight as to what and why I purchased that. I'll also show you the numbers of how it breaks down as a rental and stuff like that too, how I determined how much it's going to rent for, and everything. I'm going to show you how everything. So let's just go ahead and jump right into it. Let's see here. Okay. Get you guys to share my screen here. So, all right, so this is the property. It is a 4-bed, 2.5-bath main house. And then, so this is the main house, obviously. And then this is the garage apartment that goes up to the garage. So this is all the main house. It's actually got a sauna in the master bathroom, which is pretty sweet because I'm like, man, maybe I'll save this. Like, look at this thing. He's got a freaking sauna in the master bath. And look at this sunken tub. It's got like a massive like sunken tub. Look at this. Look how old school that is. So one of the main reasons why I picked this property, here's the garage apartment. So you can see it's already got plumbing and a sink there, and it also has a full bath. And the rest of it's kind of like an exposed studio setup, which I don't mind. Obviously, I'm going to come in here and remodel, you know, all this. I'll do mini split for HVAC. My plan is this is where I'm going to install. This will be where the kitchen is. Kitchen, island, sink over there, fridge over here, and then this whole back area will be like I'll have like an office couch area here for like the TV, and then my bed will be over here or whatever. And then there's a full bath and some closets there. So it's obviously not anything special right now, but it's something that it's kind of cool. I get to design it. You know, very rarely do I ever get to design stuff for myself. You know, I'm always designing for rentals. Never really get. I mean, yeah, my condo's decent, but it's like there's better countertops in my rentals than I have in my condo. You know, it's like, so it's kind of cool that I'm gonna get to like design a place for myself. So there's that. The roof is only 2 years old. So anytime I'm trying to buy something that I'm not going to be remodeling, like a house hack or something like that, I want the majors to be taken care of. Because normally, obviously, I don't care about those things because we're going to be replacing all that stuff. But I don't, again, low money out of pocket. I'm assuming that whoever is doing this doesn't have a ton of money to throw around. So the things I'm always going to look at, the HVAC system is brand new, 2024, a year old. HVAC, check. Roof, 2 years old, check. Water heater, a year and a half, check. So those are really the three major things that are going to cost me money when I'm doing this. So I got all those. That's one of the things that, like, when I was looking at these houses that wasn't new construction, I want to make sure all the majors are taken care of, because the last thing you want to do is, you know, try to get low money out of pocket, and then the tenant moves in, and the first summer you're there, you got to replace the HVAC system. You know, that's $5,000. It's like, well, crap, I didn't account for that, you know? So if you check and make sure that all those things are good beforehand, you can kind of get ahead of the ball. So that's the house. They were asking $285,000 for it. Obviously, if you know me, that is not what I offered them. I started out offering them $250,000. That was my first initial offer. Actually, you know what? Why don't just, do I have the offer still? No, that's I think probably just the new one. Okay, so let's see if I probably have the offer somewhere in here. Maybe I probably have the most recent one. Okay, so I had the most recent one. Okay. Well, let's just go through it. So I offered them 250 at first. We'll talk about, and then I'll go through the whole offer of how I structured it. So I offered them 250. No, 260. Sorry, I offered 260 in the beginning. They countered with 270. Same terms. I get everything else that I asked for, but they countered at 270. So it was a pretty simple negotiation. The realtor tried playing some fancy, smanchy stuff. I'm like, look, I'm at 260. You guys are 270. You already know where I'm going with this. Let's just do 265 and call it a day. So it's 265. And again, since I have to do a bank statement loan, I have to put 10% down. So that's why you see 26,000 in cash. But that is not what I'm coming out of pocket with. And I'll show you how I did this. So obviously this is going to be your escrow agent and your earnest money. I usually just do 1%. It's easy. I made no option period. And again, this is actually, she told me this is why they took the offer. It's because I waived my option period. This is why having a little bit of a construction background and just walking the property, which I did on Friday. I went up there and walked the property and just checked everything myself. That gives you a lot of negotiating power. Or take a contractor with you if you don't feel comfortable. Go do a showing, take a contractor with you. Before you offer, you should already know, okay, hey, this is what we need to be at. This is it. That way, because when they see that there's no option period, that's like every realtor and homeowner's like worst nightmare. Back in COVID, you couldn't even put an option period because your offer wasn't going to get taken because the market was so hot. But now the market's hot, it's very slow. I mean, so a lot of people, I think we're at a record high for falling out of contract. I think it was like, I said the stat on Bigger Pockets. It was like 40% of contracts right now are falling out of contract and not closing, which is like by far the record high. You know what the city that has number one? San Antonio. San Antonio is leading the way for most failed contracts in the whole nation. So a lot of people know that right now. So, and also what they might think is, okay, hey, we're already lowering our price. There's an option. Well, what do people usually say after the inspection? They want another price reduction, which is why I got them to take this offer, because I told her when I talked to her, I'm like, listen, because she didn't want to come down for 265. I guess that's like what they bought it for, whatever that number was. 270 was what they wanted to get for it. And I told them, like, hey, look, I already waived my option period. You know, you're not going to have any other price reductions. Like, we're going to close. And then they came back and they accepted it. So I clicked this box here, which means they're paying for the title policy, which is the most expensive closing cost that you have. So that little check in the box between buyer and seller is going to save me like $1,500. So again, hit it on there. Most of the time they don't even notice it, but it's going to save you $1,500. So I always hit that. Let's see, where's the next thing? So this is all useless, closing date. So here's the next part. So I put in there $7,800 in closing cost for me towards concessions. So I told you that $26,500 was what the down payment was, but that's not what I'm going to come out of pocket, and this is why. So Freddie and Fannie usually have a limit, depending if it's like FHA or if it's conventional. There's like usually 3 to 6% is the cap that they have. So I asked for the maximum amount of concessions that I could get in my offer. So if you think about it, I didn't get it for $265. I really got it for like $258. But the good part, this is less money out of my pocket. So now that $26,500 has now shrunk down to like $18,000 that I'm gonna have to come out of pocket for this. And if you were somebody that could do like 3% down, you could get your whole down payment wiped out. Just like that, zero money down. All by just simply putting in the negotiations that you wanted these concessions. Obviously you're gonna have closing costs and other costs and stuff like that, but I went and found a lender that didn't have an origination point charge. I found the broker who gets paid by the lender, so that way I don't have broker fees. Because if you're not going directly to the lender, usually a broker that tries to shop your loan, because that's what you usually want to use. You want to use a broker because they can shop multiple lenders and find you the best deal. But what they don't tell you is that most brokers get paid points as well. And some lenders will pay them on the back end, and then some lenders won't, and they make you pay the broker directly, which I've seen it. I think my first deal, the guy screwed me big time. He charged me like 4 points. That was what he made. So 4% of the purchase price, that's what he made. I've never seen that in any other contract, but I was new. I didn't know. And I think he knew that, so he took advantage of it. So again, to minimize closing costs, they're paying for the title policy. My lender does not charge origination. It's only like a doc fee, and that's it. And then my broker gets paid by the lender, so I don't pay him anything. So three things right there. That's probably saving me $7,000, $8,000, $9,000 in closing costs that I won't have to pay. And then let's see, is there anything else in this offer that really is thing? Oh yeah. So since I am licensed, and I always say, hey guys, why not? If you're getting into real estate, get your license, because this is why. Because then on this page, you can see I negotiated in there 3% for me for commission. So that's another $7,800. Well, I think it's $7,950 or whatever it is now that I'm going to get as well. So not only we were down to like what, 18,000 from the 26.5 after the concessions, now we're down to $11,000 out of pocket with my commission involved. So now I had to put 10% down, but now I'm getting back 6%. So I'm really only coming out of pocket 4%. So if you think about if you were in your case and you were able to get a 3% or 5% down, you would actually be getting money back at closing just by the way you negotiated this contract. So those are the little things that you can do to, one, how do we make it more attractive? We waived our option period. We told her, hey, there's no more price negotiations. I'm an investor. We're gonna close. I already have my proof of funds. Here's my proof of funds. Here's my pre-approval letter from my lender. Everything, your ducks are in a row. So you when they present it to their seller and their client, the offer is strong. They know, hey, this is gonna close, because they already start planning, their vacations, or how we finally are gonna sell our home. They're planning that next move, and then they fall out of contract. And I actually target that as well. There's a stat that you can look at the MLS that says back on market, and those are all the ones that day that fell out of contract and got relisted. So I look at that. The first thing every single morning is back on market, because those people, they were already celebrating, getting ready to cash that check from the title company, and they got burned at an option period. So they're really ready to make a deal now. So if you come in with an aggressive, strong offer, it's something they can take for sure. Okay, so that's the house. That's how I negotiated the price. And let's go into the rental stats of it, how I did to determine was this going to be a good deal or not. So I'm going to share my screen from this one as well. Oh, well, I'll do that in a little bit. So we'll keep with this. So this is the area, and this is just HAR, which is like Houston's Zillow, basically, if you want to call it that. So these are all the rental houses. My house is like right here in this subdivision right here. So these are all the rental houses around it. And I'm not licensed in Houston. Like I don't have premium access to this. So this is actually because my broker is in Corpus Christi and they don't have access to HAR. So I can't sign up with HAR. So I'm probably gonna have to transfer once I start buying there more to be able to get HAR access. But for right now, this is like, if you guys went on the website, I'm seeing exactly what you're seeing. So you're gonna see exactly what I did to find these numbers. So these are all the houses. Mine is a 4.3, 2,700 square feet. That's the main house. So I literally just started going on and clicking. And if these yellow ones, that means that they're under contract. So that's a good indicator of what an accurate price is, because they're under contract, which means that they're not just somebody wishing, hey, I'm going to get $3,000 for my house. No, this is like stuff that's actually under contract. So first I'll start with those. So this one is a 4.2, 2,200 square feet, and it's under contract at $2,400. This one, it's a 3.2, 1,800 square feet. Let's see if it's in nice shape or not. So yeah, this one is remodeled. So that's another thing that's taking effect. My house is not top of the end remodel. It's probably like a mid-level remodel. So let's look around here and see what else we can find. So 1.9, 4.2, but it's only 1,600 square feet. 4.2.5, same as mine, 2,500 square feet. It's not rented, but it's listed at 24. 4.2.5, 2,700 square feet, 2,300. Okay, so we're seeing a trend here. I am going to dock it a little more because it's going to be a little bit of a weirder situation, because they're going to have me obviously living in the garage apartment. So I'm factoring that into my numbers. I think realistically, if I was to rent this whole property with the garage apartment, I probably could get like $3,000, because they're going to have the garage apartment as well that they can either Airbnb, which is real common there obviously, or they can put, their 19-year-old son that just moved out or whatever, he can go pay them rent, whatever it is. But And that's because that's additional square footage not counted in that 2,700 square feet. That 2,700 square feet is just the main house. So, but I'm going to go the other way. So you're seeing these homes, they're typically going for like the 23 to 2,400. Those are the same stats that my house is. But because I'm going to take the garage and the garage apartment, and they're going to have to deal with me like living, next to them or whatever, and also some utility costs and stuff like that, I'm only underwriting, I'm going to get 2,200 a month for it. And that's just me being safe. I'm probably going to start out at like 2,450 just because it is a bigger house. And we're going to see what kind of traction we get. Now, one of the things on Zillow that hard doesn't track. So when I go on this, it doesn't show you like how many contacts this listing got. But I went on Zillow because Zillow actually will show you, and they'll show you how many days it's been on the market, and then also how many contacts they've gotten our applications. So I'll always go on to Zillow and check that as well, because if a house has been listed for like 3 days and they have 100 contacts, that means that 1, you have good rental demand for that area. 2, that means that it's probably priced pretty well. So since I won't be in a rush to rent my house out because I'm going to be remodeling that back unit, I'm going to probably start pretty high because 1, I want to try to, usually if it's a higher rent, you're going to have a better quality tenant. So you don't want to be in the lower end of it. Like I'm not going to put it up for 2,200 because I'm probably going to get flocked with people that see that that's by far the cheapest property at that size in this area. So you're going to get a lot of people that are contacting you that, not saying they're not going to be good tenants, but like the people that are trying to be cheap, And I feel like if you offer a premium product, then you ask for that price, you're typically going to only get more premium tenants. So I'm probably going to start out real high, probably like 2,500 to be honest, just because I don't need to rent it out right away. How we're going to structure our closing. So if you don't know this, when you buy a house, your mortgage payment is always going to be due the following month. So if you close real early in the month, you're going to have almost 2 months till that first mortgage payment hits. This doesn't really matter for me because obviously I can afford the mortgage. But say you were like banking on, hey, we need an extra month of savings or whatever it is. If you close on like the 3rd or something like that, your mortgage payment won't be, say you close on like October 3rd. It's always going to skip the next month, so November. So you are not actually going to have to pay a mortgage until December. So that gives you 60 days to find somebody to rent that main house out without actually incurring a mortgage charge that you're going to have to pay out of pocket. That's a little food for thought. But yeah, so I'm not going to have a mortgage payment per se until December. So that gives me plenty of time to be able to try to find somebody. Granted, it's also not the best time to find tenants because it's the holidays. People are going to be not wanting to move and stuff like that. So I'm banking on probably not having a tenant until like January or February, which I'm perfectly fine with. Like I said, I'm gonna use this is another reason why I'm doing this as well. Remember I told you guys, this is a fresh start for me. I'm moving to Houston. I don't have any contractors, HVAC guys, nothing. So you really want to have those connections lined up before you have a bunch of tenants, because then you look like a moron when someone calls you with a plumbing issue and you don't know who the hell do I call, So I'm going to use this not as tryouts, but I'm going to be, contractor shopping. I'm going to probably get 4 or 5 bids from contractors to remodel that garage apartment. While they're there, I'm going to talk to them. Hey, who do you guys use for a plumber? Who do you guys use for HVAC system? Oh, this guy's badass. He's licensed. He's off the books. He's cheap, but he does really good work. Boom, you got your HVAC guy. Stuff like that. So like these, I'm going to use this not just as like a, hey, I want to go live there and remodel my apartment. It's like, no, every step to this, there's a reason why I'm doing these in steps. Already today, my lender that I met literally off of socials because he saw me doing whatever I was doing. He's like, hey, if you were buying Houston, I'm a lender. I'm also a realtor, blah, blah, blah. We hooked up. As soon as I said, hey, I don't have anybody for insurance out there. Hey, I put you in touch with my person. There's a reason why I did that. I can get insurance there. I already have my person in Corpus that gave me a quote already, but I want to see if he knows somebody there locally that can get better quotes. So there's a purpose to doing everything that you're doing in this. So back to that. So that's how I determined why I said I can get 2,200, because if you look around here, all the houses, that's pretty much, again, I'm always going to shoot in the lower end. If you get higher, great, but I'm going to try to underwrite it the lower end. So that's how I determined rent. What are the other numbers on here? So I'll now share my screen for my ballpark. So this is going to be the purchase price, down payment, my interest rate, rental income. Again, I said 2,200. There's your PI, taxes, insurance, and then $40 is the HOA. So how I found out my taxes, and we can get rid of this now. So I went right to the HCAD website. So every county has their own tax assessor's website. So I went right there. I'm able to see what the tax rate is, what it was appraised for, and then that way I can find out exactly what the taxes are for the property. Because you always think they might have a homestead on their thing. So if you go on, they might tell you, oh, our taxes are only $2,000 a year. Well, that's because they might have a homestead, or they might have a senior exemption, or they might be a veteran, not pay any taxes. So they might tell you that, and then you're like, oh, well, taxes are this. No, you gotta always go right to the source of it, see exactly what the actual taxes are. No, I just closed that out because we don't need it anymore. What the actual taxes are, and that way you know. And then also you should always, you're always going to protest your taxes. That's what you should do that every year anyways. But one of the things here in Texas that's pretty much a guaranteed win is that once you purchase a property, you can submit your HUD as your protest, and it's basically like a guaranteed they're going to approve it because like, hey, I just bought this $265. You guys are saying it's appraised at $285. I just bought this for $265. So immediately you're going to win that protest. So now you can factor out those numbers to the T once you have the tax rate, and that, hey, those are going to be your yearly taxes. So that covered all of our taxes, insurance. That's our PITI. That's our HOA. The utilities, I'm going to have the front house will cover all my utilities, so I don't have to pay any utilities there. That's a win. And then also when I was looking for apartments, I can rent that apartment out for probably $700-800 easy if I did move out of that. So think about that. So now we're at $2,200 for the main house, $800 for the garage apartment. We're at $3,000. So my PITI, as you saw, is going to be, it's cash flowing $400 or $500 once you factor in, your 10% for expenses and all that stuff and vacancy and all those other things. So it pencils out as a rental if I even do move out of it, because you always want to have a backup plan. Say I try to invest in Houston and it really doesn't go well or whatever it is, or like I said, maybe I find something, hey, I want a bigger shop, I'm going to move somewhere else. That asset, you're always planning long term. You want to assume that you're going to own that for a good amount of time. So I want to make sure that it's still going to cash flow, because although $200 obviously is not going to be effective to me if I'm negative $190 a month or whatever it is, but it's never a good idea to buy something negative cash flow. Or you're just assuming, oh, rates will come down and I'll refinance in a couple of years and then I'll be cash flow positive. It's like, you never want to do that. Never assume anything. Like, again, you want to really cover yourself. So you could done, like I said, my first initial, right off the bat, duplex, fourplex, or triplex. Find one of those. You're going to have way less risk because now you have 3 tenants that are paying you monthly mortgage. Like, for example, that house that I have, until I found a tenant for it, I'm out that whole mortgage. So if you have a fourplex and you have 3 options of people to pay you money, yes, it's not going to be as much, but say 2 of them you can get filled up right away, or maybe 2 of them are still living there, and then you can remodel one and then move it, recycle. That's a lot less risk because you already have money coming in. But again, guys, you're doing this as a house hack, meaning you were already paying rent before, you're not paying rent now. You have a mortgage. So either they're covering it or you're covering it. As long as you bought in that same range where you were spending, you're still saving money. The biggest thing people are, hey, I don't have any money. How do I get involved in real estate? Start saving money. I don't need to go off on a tangent because I could talk all day about living frugally. If you know who I am, you know I'm cheap. All my friends have told me that for decades. But guys, to be honest, that's why I'm here today. Is because I saved money. When I was a federal agent, my first year's salary was like $40,000 because it was like a half year or something like that. And I was making decent money before I took that job. And there was a saying, what was it, 5 years, 6 figures or whatever? Because every year you got a pretty decent sized pay bump. For the first 4 years, it was like 10 or 15 grand a year you got on your base salary level, not including overtime and stuff like that. Off your base salary, you got a bump. So by year 3 or 4, you were in the 6 figures. And what I did is I watched all the other agents. They'd come in down low and they'd be living paycheck to paycheck and have nothing in savings. And then they'd get their next raise, like it was a 9, it was like 7, 9, 11, 12. And then after that, it starts to slow down. They'd get that big bump from a 7 to a 9. It'd be like a $12,000, $13,000 raise. And then they go buy a new truck. It's like, okay, well, that $1,000 a month you were just making, you just went and bought a brand new truck, and that now you're still living paycheck to paycheck and not saving any money. And then they get their 9 to 11, and then they go buy a house. Okay, well, now that mortgage is, you went from renting a 1-bedroom apartment to, a $4,000 square foot house. There goes that raise. And then the next raise, they go buy a boat or something, or a bike or a second vehicle. And it's like, in the end, they're still all living paycheck to paycheck, not having anything in savings. I had my same budget from when I was making $40,000 to when I was making $120,000 in those several years or whatever, and I still kept the same budget. People ask like where I got my seed money that I started from. It was savings. I literally took almost everything and put it in my bank account and didn't spend it. I had roommates. I actually, before I even knew I was in real estate, I house hacked. While I was in the academy, I found a house and got 2 roommates. There were 2 other kids that were coming there from the academy. They covered most of the mortgage. I just covered the electric bill. But it was because I took the time to go down to rent the place, and it was in my name, and I charged them, each of them paid like $600 or whatever, and the house rent was like $1,250. So I lived for like $50, and I paid for the electric bill, which is like $300. So I was half of what I would have paid even for a 1-bedroom apartment. But again, you got to be crafty and you got to save money. My first apartment that I got was like the cheapest apartment in town. But hey, if you want to get out of the situation you're in and you're hurting, not physically hurting, but like you don't want to be there. I don't know how people, I hate my fucking job, I don't want to do it. Well, you don't hate it enough because you're still going out there and buying dumb shit. Like, you don't hate it that much. I did not want to work for somebody else. I wanted to work for myself. And I was going to make it whatever I had to do. Man, you guys, everyone, you don't know half the sacrifices that I've made in my life to get to where I am today. And everybody, you're so lucky you don't have a job. You wouldn't do half the things that I did to sacrifice to get here. Because I don't have rich parents or a rich uncle who gave me a bunch of money to start investing. That was my money that I invested, that I saved for years. Do you not think I had analysis paralysis, knowing that that was literally like 10 years of savings that I was investing right away? 10 years of me not getting the car that I wanted. There was times I would not go on dates with people because I'm like, I don't want to go spend $100 on dinner with somebody I don't even know, or like wouldn't. How many there was my first 4 years I did not go on vacation. It was to the point where I had so much vacation time stored up, they call it use or lose. Like I had to use the hours or I was going to lose them because you can only carry over so many hours every year of annual leave. Didn't take vacations. No one sees that now, obviously. They just see me doing whatever the fuck I want to do, but that's because I earned that. And again, I guess I kind of went on a tangent here, but the moral of the story, guys, save money. Every dollar you save is a dollar earned. So if you can save $1,000 a month off your mortgage by house hacking with fourplex, that's $1,000 you're sticking back in your pocket. And then the next year, hey, you just saved $12,000. How much money did I put down on this? $11,000. So you can buy another one the next year. Move to that one. Move out or move a tenant into the one you were living in. Now that property's cash flowing the same, and you're still saving $1,000 by the one that you're in. So now you're up $1,500 a month, and that's how it compounds. And if you're buying in the right area and you get the appreciation and all those other benefits that you get this is how you eventually get to there. And this is not doing value add. This is not doing any other sub 2 strategies. There's so many other strategies you can do. But this is what I think with the buyer's market, the way it is right now is the best way if you have low money, you don't want a lot of risk, you don't have a lot of experience, and you don't have a lot of savings to get into real estate. And I'm going to walk you guys through it. Like I said, this is just, we just went under contract. Our closing date's 30 days out. So I'm going to show you from start to finish how I, how do I hire my contractors? How do I price out the apartment build? Everything. How I tenant screen. And again, this is me starting in a brand new market with 0 connections. The only people I know in Houston were people that through my ex. So obviously I'm not going to use those for references. So it's literally like starting from scratch. So appreciate y'all tuning in if you made it this far. Again, if you're not subscribing to the channel, please do so. I really appreciate all the feedback that I get from you guys. If you have questions, please shoot me a DM. I should be making another episode here of another questionnaire episode. If you got questions, shoot me a DM, guys. I love to answer them.